What's up, guys? John Johnson here again with my man Joseph Falla. We are going to dedicate this episode to our vets, our veterans. And Joe's going to walk us through the VA product or a VA mortgage. And if we have time in this episode, we'll talk about a VA renovation loan as well. So before I hand it over to Joe, once again, Johnson Signature Group, Exit Platinum Realty, 908-338-0639. And Joe, let's talk about these rates because as we told folks the other week, the Fed was going to raise those rates.
Another, what is it? What was it? 75 points, right?
Yep, yep.
And
Talk
he is
to us, Joe.
determined. They are determined to keep on a chugging and a chugging until they get this inflation under control. I don't. That's a whole, video within itself. But we're gonna see where this thing ends up in 2023 and going forward. But it doesn't look good right now. So you can see right now on Mortgage News Daily, again, as I advertise every week, these are not my rates or your lender's rates. This is just an average uh, of what, just an average of what, about 20 banks, they put it together. I think this is what the average is, right? Plain and simple. So on a 30-year fixed conventional loan, we're looking at a 6.87. Uh, FHA, 6.38. And on a VA loan, we're looking at a 6.40. So that is the rates as of today. This is not this is, as you can see, this is just based off your principal and interest. These numbers that you see there on the bottom. So that's the rates as of this afternoon. So as we can see, they've gone up quite a few. But before we even got this show started or this Instagram show going, we were all saying now is the time to buy, and everybody had a crystal ball. For those that didn't buy, I've bumped into a few uh, new homeowners over the last couple of weeks, and the smile on their faces, even though I didn't close their loans necessarily, just a smile on their faces. And a lot of New York people coming into Jersey, um, no matter who no matter, listen, you can see the shirt, right? No borrower left behind. I'm here to help everybody. So it doesn't matter. Just the just the smile on their face is makes me happy.
And Joe, just looking at these rates today, I can proudly make phone calls to some of my buyers during the pandemic and say, you do realize the rates today are 3 times the rate you currently have now. That's crazy to me.
Which goes back to what we're talking about. Refinances are out the window. Now it's all about. Now you're gonna see all the lenders talking about HELOCs, HELOCs, HELOCs because they know, you know, anyone with that's even half-witted will know not to touch that rate.
Yeah.
Those rates, those 2.87s and those 2.5s, even 1.5s, 2%, those are phenomenons, and I don't ever see having to see those have happen again. I don't think those are ever going to happen again.
Yeah, it's one of those once in a lifetime
So
opportunities.
just like the stock market, everybody became a crypto billionaire. Now crypto is one third of what it was during COVID.
It's crazy. And Joe, you reference HELOCs, and for our audience tonight, um, check out our last episode because we spent some time, or Joe spent some time, talking about HELOCs and cash out refis and all that good stuff. So check out that episode because that's really like your only play right now. That's the only card that you can really pull
Absolutely.
right now.
That's it. And everything else wouldn't make sense unless there's some sort of dire need for you to, change that rate to one of the current rates. And it won't necessarily be what you see here on the screen, but it's definitely not, you're not going to walk out of that office with anywhere
Crazy.
near what the rate that you have right now.
That's
And
crazy.
everyone's situation is different, right? So just
Yeah.
because we're saying it's not a good idea, it may be a good idea in your situation.
Yeah.
But that's that. Let's get that guy out of here. They're no friend to no one.
Right. So Um, Again, tonight we want to, spend some time to talk to our veterans. And, I'd be remiss if
Absolutely.
myself and Joe didn't thank all the veterans out there that are watching this episode, thanking you for your service in protecting this country. And, we hear the horror stories all the time. When you come back home, there's nothing for you. You get a handshake, you get a clap, you get a hug, a kiss, welcome back. But then after that, it's like,
A thank you, a pat on the rear end, and see
yeah,
you
it's like
later.
you're on your own. Like, thanks for nothing.
Hmm.
So we want to talk
Not
about
for
what,
everyone, but we all seen the stories.
yeah,
We've heard and seen the stories.
yeah. So from a real estate perspective, when it comes to financing, there are some products that are out there to help our veterans that qualify, obviously, and Joe will go into that in the form of a VA loan. And there's even a VA renovation loan. So I'm going to ask Joe to kind of walk us through that VA program. How does that work? Requirements, etc. Joe, take us through that, man.
Yeah, so VA loans, tonight we're going to debunk a lot of myths about VA loans. They have negative connotations out there in the market. Um, I've seen where sellers sometimes think they have to cover costs. Um, Appraisers are slow. They take ages to close. I'm sure you've seen, John, that this is just not a fact. It's not true. It may take a couple of extra days, but nothing um, anywhere near what the myths are out there that they're going to take an extra 30 days to close and things of that nature. So those are some of the negative connotations about VA loans, and they're completely untrue. So VA loans are government sponsored loans as well as your FA. They're just as the same as your FHA loans. The only thing is there's no down payment necessary. So with an FHA loan, the average down payment is 3.5. With the VA loan, it's zero down payment. Zero down payment. That's right. Um, it's for any military or their surviving spouses that's had at least 2 years service. If they're in the reserves or National Guard, we're looking at 6 years of service. All right. So those are some of the requirements. All right.
Okay.
So what sort of what negative things have you heard in the past, John, about VA loans?
Well,
Or
I've
have you
always
heard good things? Or have you heard number good things?
I've heard a number of things, but there were also some things that were left out
Okay.
in the promotion or commercialization of the product. Um, I mean, first and foremost, the obvious negative myth out there is that VA loans take twice as long to close
Right.
as a
It's,
normal
it's,
mortgage.
it's not true. The process is almost identical. It's just a couple of documents that we need from the veteran or the active military, the person in the active military, or from their spouse that we need. But we take care of that. Just listen. We're gonna start. You know, again, we're gonna debunk the myth. How long is an average loan closing taking to close right now, John? From from application to the closing table.
Start to finish, we're looking at 30 to 45 days.
30 to 45 days. There is literally just two additional documents in most cases that we need that most veterans either have or we as the lender can help find them. That we get them right from the VA website or the veterans website. It's one of the two. Um, so you're it's unfair to say that, oh, it's going to take extra long because they need all these. It's not true. It is true that they need a couple of extra documents, but we can get those within the first week. Or I get all my documents on before I even give out a pre-approval, just to make sure that it's a tight pre-approval. So there's no way I would give anyone at your company or whatever office a pre-approval where I haven't done my due diligence. So that's something you wouldn't even have to worry about.
Okay. The other myth that I hear, well, because
Okay.
it's no money down, chances are that means the buyer or the candidate has no money and their credit's probably shot. So this is just a bailout to get them into a home.
Right. Right.
That's the other myth.
So when those $1,400 checks were sent out last year, how many people do you know sent them back?
Mm,
that were getting unemployment, that had money in reserves in their bank accounts
mm,
to last them at least a year. Do you know of anybody that sent that money back?
That's why I sip some water, Joe. I don't know if anybody that sent that money back.
If the opportunity is there, it's a program uh, built specifically for our brave men and women that serve for this country. That's all that it is. Just like the police and fire department have their own program, there's down payment assistance. We've spoken about that before. In New Jersey, you can make up to $140,000 individually or as a household and get down payment assistance. Um, these are uh, just a benefit. It's just a benefit that comes along with everything else that may come with, student loans for VA for our veterans. Um, Health, don't they go right to don't they get like special health care or something like that for the
Absolutely.
VA? This is all the stuff that comes along with it. So to say that someone doesn't have good credit or they don't have down payment, no. Why would I give up money that I can use to furnish my house, to remodel my house, repaint my house, if the government is saying I don't need to put that money up?
Right. And just to clarify that, Joe, you're still running their credit.
Oh,
Like,
absolutely. Yes.
yeah,
Sorry. Yeah. That's. I
yeah,
still have to run the credit.
yeah.
My bank has, like I say, every week we don't have a lot of overlays guidelines on as far as credit. As long as you have a 620, we can qualify you a middle score of 620. That's all that we look for.
Right.
So that's the same for a VA loan. So I'm sorry, the same for a FHA loan, the same for
Hmm.
a VA loan. Same credit guidelines. But another benefit of the VA loan is that we've spoken in the past about DTI, right? Your debt to income ratio.
Hmm.
So what you're making, right, divided by your liabilities, your car payment, your student loans, your credit cards, right? Utilities, um, cell phone, we don't count that, right? In every bank is different, like I've said, like I've always mentioned. Um, but the actual the the actual ceiling or the number that we can stop at is actually a lot higher. So we're able to qualify more people um, for these loans. I literally with a FHA loan, I know where I need to stop as far as my bank, right? We're normally in the 46 to 57 for a back end, right? I literally for a VE loan, I put in all the information, I've seen some debt, and I just keep putting it till I get an approval from AUS, which every applicant that I work with is always put through the government AUS program, so I get an approval from the government. So basically, they're looking at what we've inputted as their salary. They're seeing what we've inputted for the liabilities, if they've purchased any houses in the past, any bankruptcy, and they're approving the lender based off those facts, not my bank for per se, just based off those facts. And we can act like I said, we when a DTI, we can actually go a lot higher with the VA loan.
Right. And, we spent some time in the previous episodes of Real Estate Keys talking about DTI,
It's about
talking
three
about
weeks ago
credit
we went over
score.
it. Go back and check that video out.
Yeah, definitely check out the resources, check out the videos because the process is the same. It's just that
Exactly the
this
same
program
process. Right.
is for veterans. So there's no, oh, well, the government's just putting people in homes that, served in the military and they don't have to run their credit, this, that, the third. Simply not true.
That's simply
They
not
still
true.
have to qualify. They still have to be strong. They still have to meet the minimum requirements.
Right.
The other thing, and it's not really a myth, I would say. It's not really a myth, but
Okay.
I think we don't really emphasize it as much. I know I do. I know you do. Um, but it's a 0% down payment.
Correct.
However, there are still closing costs.
All the standard closing costs still there. And there's also another benefit is there's no upfront mortgage insurance or monthly mortgage insurance. So that's more money, especially in today's market, that um, the borrower can use to pay down their loan, maybe make a better offer on the house, provided we always wanted to hit that appraisal number. So They, instead of putting that money, into a fund, they can actually put that money towards the purchase of the house.
Yeah. And Joe, I want to spend a little time on, monies that you need to have.
Hmm.
Because a lot of veterans out there want to buy a home. They're still trying to buy a home through the pandemic, and now they're starting to see inventory pop up. But you still need some funds. I mean, there are some upfront costs that have to come out of pocket: home inspection, appraisal. There are certain monies that you need to set aside for.
Pest inspection is one
Okay.
that you don't. That's one of the different ones. You actually have to get a pest inspection approval.
Okay.
You don't normally have to get those on an FHA loan.
Okay.
I said
You know, yeah,
pest,
pets
not
like
pets.
termites and
PST, right? Exactly.
rodents and all that good stuff.
Right.
Um,
Anything that can, aside from the aesthetics, that can knock down the house.
yeah, termites especially, right?
Exactly. Yes.
Um, but I just want to make it clear. Both Joe and I want to make it very clear. Just because it's 0% down, that's your down payment. However, we spoke in the past. Between 3 to 5% of that purchase price, you might have to have in the form of closing costs in order to close on this kind of loan.
About
Um,
2.5%.
2.5%
About
roughly.
two and a half. About roughly 2.5%. So that's going to cover your attorney fees. That's going to cover your upfront mortgage, your actual insurance for the house. You have to pay that up front before you go to the closing. Your appraisal, your inspections, um, reserves, taxes,
Hmm.
your monthly the upfront mortgage that you have to pay, payment that you make in advance,
Okay, great
title
breakdown.
coverage. It's all the same as a VA loan.
Yeah.
The
So
only one difference is there is a funding fee. So there isn't any upfront mortgage insurance, and that fee can vary. I wouldn't want to give out a number right now,
mhm,
because it varies from applicant to applicant. But let's say it's around 3% to 3.5% that you do have to pay upfront. But again, benefit, benefit, benefit. If the actual veteran was released from service due to some sort of disability, or they're receiving money because of a disability, the funding fee is actually waived as well. So that's another cost that they don't have to put up front, that they can put into the purchase of the house, or they can use that funds to fix up the house, dress up the house however they want it to look, paint the house once they buy it, new furniture, new appliances, whatever the case may be.
nice. And let me bring in the unicorn as well. So you can also get what's called a seller's concession.
What's that? Never heard of that.
Never heard of seller's concession?
Not today, not in today's market.
Ah, wow. The market's turning now, isn't it?
From what I hear,
Yeah, from what you showed us in the very beginning, I think the market's turning.
just a
But
bit.
seller's concession is when a seller of a property concedes or contributes towards those closing costs. So Joe mentioned 2.5%. I mentioned between 3 to 5%, whatever that is. Your realtor can negotiate with the other agent if there's another agent involved and request that a certain percentage of monies or dollar amount is conceded or contributed by the seller to cover your closing costs. So,
Oh, it's coming to me.
yeah,
Seller, I got it. Seller contributions, right? I got it. Got it.
mhm,
Got it. Got it.
seller's contribution. So, what happens is the seller wouldn't get all of their profit from the property or the sale of the home. They would basically set aside a certain amount of money to actually credit back to you, the buyer, to cover those closing costs. So, there are opportunities where a VA loan is truly no money down and no money out of pocket to cover closing costs if that deal is structured properly to include a seller's concession to cover some of those closing costs, with the exception of your upfront costs that you have to pay, which would
Right.
be an appraisal, which is something you have to do before you actually close, home inspection, which is something you have to do before you close. You might have you might choose an attorney that may ask for a retainer fee, which would be a nominal fee that you would pay for an attorney to represent you up front. And then the remaining portion would be due at closing, in which case, if a seller's concession was applied, it would cover the balance. But there are some fees. So instead of you coming up with, let's say, $5,000 in closing costs to cover all of those fees, from upfront closing costs to the closing costs that you need in order to close, you're talking a couple $100 that may come out of your pocket with a seller's concession.
And there is a limit. There is a limit. On FHA loans, they're up to six. The seller can contribute up to 6%. On VA loans, they can contribute up to 4% of the
Right.
purchase price.
And that's well within the range of what you and I have been talking about as far as estimating closing costs. So it can work very well in your favor if your agent, your attorney, your team can negotiate a seller's concession on your behalf.
Absolutely.
Awesome. Let's see. Last myth, the appraisal. So a lot of people may feel, and it could be true, I don't know, Joe. A lot of
Okay.
people feel, well, you're putting no money down. There's really no skin in the game from a buyer's perspective because you're not putting any money down.
Right. Because you
And
don't have to.
right, because you don't have to. And
Because
this
you
is
don't have to.
right, you don't
You
have to. And this
served
is a
this. You
government.
saved it. You served in this. You served for this great country, or you were at war at a certain point for this great country. So guess what? You don't have to put down a down payment.
So you don't have to put down a down payment. It's insured by the government. So when they do an appraisal, are they going to look for every little thing that's broken and needs to be repaired?
It's
Because
going to be the same as it goes through a different process on our end, as far as the appraisal company.
Mhm.
Um, but the process will be the same. Basically, if if the windows are not closing, if the sidewalk needs to be repaired, if the handrails inside the house, outside the house, they're teeter tottering. If the house looks like it needs new paint, you could, they doesn't pass a lead inspection or whatever the case may be. If the kitchen just looks like, Mama's lasagna blew up all over the kitchen, um, it's going to be the same. You're going to come back with the same response from the appraiser as an FHA loan or a conventional loan.
yeah, and to add on top of that, a lot of the municipalities are trying to improve the look and feel of their neighborhoods now. So a
Right?
lot of the things that
And
the
this
VA appraisal
evidently,
will find,
from what
it
I
can,
hear, this has nothing to do with the appraisal.
yeah, the city or your town that you're looking to purchase it, they're going to be looking for the same exact things anyway.
Absolutely.
It's crazy. One thing I will add, you know, this is a VA loan. Joe will get you pre-approval for a VA loan, right? And that's what I would use to present with your offer. Um, if you have funds to put up as earnest money or an initial down payment, it appears to the seller to be a little bit stronger. But just notate that's your earnest money deposit. With all the things in place in regards to this program, you would get that earnest money back because it's 0% down, with the exception of any closing costs that you have to pay. But for the most part, expect to get most, if not all, of that earnest money returned back to you.
That's a great point. I know and obviously these sellers don't want people just going out making offers willy nilly, all over town just to try to get an offer accepted. And then they want to, pick and choose which of the 10 offers they put in on over town. So yes, once your offer has been accepted, there is the earnest money deposit that I'm assuming these sellers are going to want to have you put down.
Yeah. Sellers
And
want to
some
see
of the
something.
upfront costs that we're talking about. Again, these people are
Mhm.
not walk. These veterans, let's say, better to say these veterans are not walking in with empty pockets. They do need to have some skin in the game.
Yeah, a little bit of skin. In this case, a little bit of skin.
Absolutely.
Yeah,
And
and
what they
Joe,
need, go ahead.
that,
I was just gonna cover. So what I'm actually looking for up front is just uh, two documents: a COE, basically that confirms, that they're a veteran and their eligibility, right? Or a DD 214. That's basically all we're looking for. If they are, if they were disabled, during the service, we're just looking for an award letter. So these are the couple of documents I'm going to get right up front, just as simple as I'd be, just as easy as me asking for the driver's license, social security card, bank statements, W-2s, tax returns, pay stubs. These are all the same documents that I would be asking up front, and it's all going to get piled in together on the application. And
and
that's
Joe,
it. That's pretty much it.
Joe,
That's pretty much it.
I'm sure people started taking notes. Just repeat those documents.
So
That
from the members of the military, anyone that's a veteran, all I need is the COE. If you don't have it, we can help you find it through the office. And if you are injured during your service, all I need is the award letter that was given to you when you were discharged. That's it. Those are the two documents. I think we could have just said that and saved us 25 minutes, John.
no, no, we're all about the
I should have
education.
just said that at the beginning.
We're all about the education, man.
Electricity rates are going up.
Yeah, they are. They are. But nah, it's all about the education. Um,
Absolutely.
and again, we run out of time. So I guess next week, Joe, we're gonna have to talk about the renovation loan product as well
Sure, no problem.
that goes along with this.
And you could use this same program for refinancing as well. We'll go over that as well.
Gems, gems. Joe, we've wrapped up another episode of Real Estate Keys. Johnson Signature Group. That's the hashtag. That's the brand. 908-338-0639. Joe, how they get you?
Again, Joe Does Mortgages, 908-669-9091. Or you could DM us either on YouTube, on our YouTube pages, our Instagram pages, Facebook pages. And please, please, please do not forget to subscribe, and like. If you have any questions, feel free to put the comments, in the pages. Um, and just subscribe. That's what we ask for, to get these algorithms going in the right direction for us.
That's right. Joe, I appreciate you. Our viewers, our audience, we appreciate you as well.
Appreciate the members of the military that are serving for us, in these difficult times, especially right now. Um, I thank you all.
Thank you for your service. Have a good night, all.
Good night.